Hello guys, welcome back to my YouTube channel. So guys, in today I have another bang for you guys. We are going to take a look at our school-based assessment for grade 12. So guys, we are preparing for our what you call SBA. So we are preparing for our SBA, so we need to be able to complete our ledger account. We need to be able to complete our ledger account specifically for companies, and then such as OSC, which is ordinary share capital, as well as retained income, as well as SARS, and then ordinary share capital, as well as our income tax and shareholders for dividends. So we need to pay attention, as this video will help us a lot. So guys, let's continue. So we are going to do question 1, which is companies ledger account, and then for theory part I will just skip it for now, and then we are going to go straight to 1.2, and then it says record the following ledger accounts in the second section of the report. And then the financial year of Mlungisi Ltd ended 30 June 2022. So our financial year for Mlungisi ended when? 2022, June 2022. And then in brackets, calculation must be shown in brackets. Hopefully, I think my answer sheet will be enough so that we can be able to show our calculations in brackets. Yes. And then 1.2.1, we are required to do ordinary share capital as 6 marks, retained income, SARS income tax, as well as ordinary share capital. And then guys, we have our ordinary share capital, and then our ordinary share capital will be regarded as what? As owners equity, and then all owners equity accounts will increase under our credit side while they decrease under our debit side. As well as we are going to have our retained income, and then our retained income is also identified as what? Owners equity. It will increase under our credit side and then decrease under our debit side. And then guys, we have SARS. SARS will be classified as a liability, and then all liabilities will increase under our credit side and then decrease under our debit side. And then guys, we have our ordinary share capital, and then under SARS we might also add what you call another account which is known as what? Income tax. It might help us a lot. So we are going to have an income tax, and then ordinary share capital. And then for ordinary share capital, we will be able again to open our another account in which it will be known as what? Shareholders for dividends. It's a liability account, and then all liabilities will increase under our credit side and decrease under our debit side. So guys, since now we have classified all our accounts and we are able, and we have this answer sheet, then let's get straight to the point. And then it says information: Mlungisi Ltd has an authorized share capital of 2,500,000 ordinary share on the 1st July 2019. They issued 1,500,000 ordinary share at 3 rand each to shareholders. So the financial year, our financial year, we are preparing for June 2022. So during July 2019, Mulungisi issued 1,500,000 ordinary share at R3 to shareholders. And then note, no additions were issued or repurchased since 2019, meaning from 2019 up to now so far we don't have any additional shares as well as repurchased since 2019. And then balances on the 1st of July 2021, meaning since we are preparing our ledger accounts for June 2022, meaning we need to have what you call opening balances. So the opening balance will be the previous year, which is 2021. So during the 1st of July 2021, we had opening balances for what? For ordinary share capital, meaning we have to to go to the ordinary share capital and record. Then we are going to go under our credit side and write our opening balance, and then we are going to have balance brought down as how much? 4,500,000 as 4,500,000. And then it's when it was the 1st of July. So 1st of July we had an opening balance of 4,500,000. So we have recorded our 4,500,000, and then we move on to our retained income. So also for retained income we have our opening balance, and then we are going to go and record under our retained income, and then we are going to write opening balance. It's balance brought down of how much? 650,000. and then 1st of July 2019. And then guys, we have SARS, which is South African Revenue Service income tax, and then they told us it needs to be recorded under the under the debit side, meaning in this case guys, we are not the one who are owing SARS money in this case, but SARS owe us money. But if ever it was to happen that this 8,000 it was recorded, it needs to be recorded under the credit side, then this amount was supposed to be payable to SARS. So in this case now, because of it's under the debit side, so this 8,000 is not payable to SARS, but it's receivable from SARS. So we have to we have to record. So we are going to record 1st of July 2019, and then we have the opening balance as balance brought down. How much is it? 8,000. And then we recorded our SARS, and then we have shareholders for dividends. So that's why guys, I was including what you call shareholders for dividend. It's a liability, so we have to pay our shareholders. So during the 1st of July we have the opening balance. So it's balance brought down. How much? It's 180,000. So we have recorded all this information, and then now we are no longer going to go back to information. We are done with this given information at the top. And then guys, as you can see that we recorded our opening balance. So this is the first step you need to do. Ordinary share capital opening balance has been recorded. Retained income opening balance under the credit side has been recorded, as well as SARS income tax has been recorded, the opening balance. And then we have our mini income tax, in which we are going to use what you call contra entry principle. One account must be credited while another account must be debited. And then we also have our contra entry accounts, such as ordinary share dividends as well as shareholders for dividends. So guys, let's continue. And then transactions for the year. So now we have transactions for the year. And then during the 20 July 2021, and then the information is as follows: paid the amount owing to shareholders for final dividends, full stop. So guys, we need to be careful of this full stop. So now they are telling us that we paid the amount owing to shareholders for final dividends, the amounts that has been owing to shareholders. And then let's go. So we have this account for shareholders, it's shareholders for dividends. So the opening balance, as we said, that it's a liability, it's recorded under the credit side, meaning we are owing this 108 to our shareholders. So now the transaction has said that we have paid the amount owing. So now we need to do what? We need to pay the amount, or we need to pay this amount. So how are we going to pay it? We are going to pay it under the what? The debit side, so that at the end of the day we are left with 0. We are not owing any shareholder. And then we are going to say what? 20 July, the money was from the bank account, which is what? CPJ. We paid cash. How much did we pay? We paid 180,000. And then at the end we are no longer owing this certain shareholders, and then we can move on. So most of the time, tick each and every transaction that you did. And then let's continue. Second bullet on the same month: the total amount for two provisional payments. For two provisional payments to SARS was 360,000. And then guys, when it comes to SARS, we pay SARS based on what you call provisional payments, meaning SARS in our financial year needs to be paid twice. So we are going to have the first provision, which is the first 6 months. So within the first 6 months of our financial year, we need to pay a SARS, and then the last 6 months will be regarded as our second provisional payment to SARS. So now the statement is clear enough, stating that the total amount, meaning the total amount for two provisional payments to SARS was 360,000, meaning we have 360,000 as our total payments to SARS, meaning it's what? It's two provisional payments. It's what? Provisional payments to SARS. And then it continues. 55% of the total was paid on 31 August 2021, meaning the first provision, it's how much? The first provision is 55%, meaning the remaining is how much? It's 45%. And then the first was paid on what? On the 31 August 2021. So 2021 we paid the first provision, and the second payment was made on the what? On the 28th February 2022. So this information needs to be what? To be recorded as we paid SARS. So the relevant account for SARS, we have to go to the relevant account for SARS, which is this one, SARS. So now, since we said SARS is a liability, we owe SARS under the credit side, and then whenever we pay under the debit side. Then now we need to what? To record our payments to SARS. So now we are paying. So first provision, it was the 31 of August. So the money was from our bank account, and then we had to pay how much? 55%. So guys, and I'll just show my calculations underneath there. So in order for first provisional tax, which is first provisional, it's 360,000, and then they said we have to pay how much? 55%, and then it's multiplied by 55 over 100, and then how much do we have for our provisional tax? We have 198,000. So this is our first payment, and then it's regarded as what? CPJ. It's cash payment journal. We have paid our first provisional income tax, and then it's 198,000, and then we record our 198,000. It's a payment that we made to SARS. Sure. So now let's pay the second payment. So the remaining here now, the second provisional tax, it will be 360,000 subtract 198,000, and then equals to how much? Equals to 162,000. So 162,000, it was a second provisional payment that is made on the 28th of February 2022. So we are going to record that information. So on the 28th of February, we paid again. The money was from the bank, and then it's CPJ. How much? 162,000. So now we are done with this information. We paid our 2 provisional tax payments to SARS, and then now we go to another transaction. 1st October 2021, the company declared and paid an interim dividend of 14 cents per share. So guys, whenever we come to what you call to paying our dividends, we need to be able to understand our dates. So when it comes to the dates of our financial year, they are very important to an extent whereby they will help you to be able to calculate the units of shares in which you have to pay for dividends. So guys, first let's go to our ordinary share capital. So under our ordinary share capital, we have an opening balance. So we need to be able to know how many units of shares did we have at the beginning of the year. So as they told us that at the beginning of the year we had 1,500,000 ordinary share. So we have to have our 1,500,000 ordinary share. So most of the time while I teach my learners, it's what you call a straight line method. So aside just have your straight line method of your ordinary share capital, it will help you in terms of calculating what you call dividends. So this thing will be our OSC, which is ordinary share capital. So automatically this is the ledger, and then this is our straight line. So 1st of July 2019, we had 1 million units of shares. So we started with 1,500,000 units of shares as our opening balance, and then with what amount? 4,500,000. So this side it's amount, while this side it's what is the units of shares. So this is what we have currently, and then this thing, it happened when it was the 1st of July 2021. So this is what we have, 1st of July 2021. 2021. This is what we have 1st of July 2021. These are the number of units that we have. So the transaction says the company declared and paid an interim of 40 cents per share when 1st of October 2021, and July came first before what? Before October, meaning that these units of shares, they do qualify for our interims. So how are we going to pay for our interims? Then we are going what are we going to do? Then we have to identify the units of shares that are available. So the number of units of shares that are available, it's 1,500,000. And then how much are we paying to our shareholders? We are paying 14 cents, meaning it's going to be what? Multiplied by 0.14 cent. And then how much is going it's going to be paid to our how much amount of money is for our interim? Then it's going to be 210,000. And then guys, in this information, we'll have to go and record it under our ordinary share dividends. So this is the structure that we need to have. We need to have what? We need to have interims, and then we also need to have what you call final dividends. So first we paid our interim, and then we are showing the calculation. 1,500,000 multiplied by 0.14, and then how much was it? It was 210,000. And then when 1st of October, so 1st of October, we were able to pay our interims. Can I just do this? So 1st of October, we paid our interims. So we paid our interims 1st of October. Then it's what? It's CPJ. We paid our interims. It's CPJ. How much are they? 210,000. And then how did we get that? We identified the units of shares that we have, and then 1st of July we had 1,500,000 units of shares, meaning they came first, meaning these shares, they came before paying our interims. So that's why we said 1,500,000 multiplied by 0.14 cents, and then we have our 210,000. And then let's continue, guys. So we are done with this transaction. Now we are going to the second transaction. The company issued a further 300,000 shares at 420 cents each. So now, guys, in these states, the company is selling more shares. So normally we are calling it what? An additional shares, meaning we need to go to ordinary share capital. So whenever we sell more shares, our owner's equity account will do what? Will increase, because of now we are going to get what you call an income. So now we are going to get an income. Then we are going to say that 1st November we are going to have bank, and then how many shares are we expecting? Are we selling? We are selling 300,000 shares at what price? At 4.20, meaning it's literally 4.20 cent, and then it's CRJ, the money it's coming in the business, and then how much is coming in the business, and then 300,000 multiplied by 4.20, and then we are going to get 1,500,000 260,000. 1,260,000. Can I just, guys, erase calculations, and then we'll just show you the calculations down there, just to make it more smoother and neat. And then, as we said, it's what? It's bank. So the money is going to come in our bank account as CRJ, and then it's 1,260,000 as we sold more shares. And then our straight line, it will be what? A straight line, and then we'll show that we received 300,000 units of shares as what? Additional shares. Additional shares. As additional shares at what price? At 4 Rand point 20 cent, and then it gave us 1,260,000. And then when was it? It was the 1st of October 2021. And then this is how we have recorded it in our ledger account. And then we are also doing the straight line in order for us to be able to calculate the dividends. So this is how. First, we had an opening balance, and then we have the additional shares, and then we move on, guys. Done. And then the transaction on the 30 June 2022, the company bought back. So now the company has decided to buy back shares of how many units? 50 unit shares at 140 cents above the average price. So, guys, normally whenever you get to this kind of transaction, transaction or whereby the company is it's buying back shares, you must think of what you call a average price. You must think of what? Average price. So forget about at what rate or at what price are they selling shares at. Just make sure that you know how many units of shares are being bought back into the business, and then immediately think of what? Of an average price. So how are you going to be able to calculate the average price? So average price will be what? Will be the amount of shares divided by what? By the units of shares. So literally at this point, let's do it practical. So that's why I love using what you call the straight line method. So here we are expecting to buy back shares. We are expecting to buy back shares of how much? 50,000. We are expecting to buy back shares of how much? 50,000 shares. And then it will be what? The repurchase. It will be what? Repurchase. And then, but at what price? That is the problem. So we are going to to use the average price. We have to to calculate the average price, guys. It's a must to calculate the average price. But now what is the question says, how are you going to calculate the average price? So the amount divided by the units. So which amount are we talking about? The amount of shares. So right now we have these two amounts of shares, which is how much? We have 4,500,000 plus 1,260,000 divided by what? Now we need to divide by what? By the units of shares. But which units of shares? This ones, the opening and also the additions, because of this is what we have currently. It might happen that you don't have your repurchases, they came before additions, then you need to use whatever you have. But for now we have the opening and also additions, so we need to include them. So the units for opening, it was 1,500,000, and then the units for additions, it was 300,000, and then our average price will be how much? Will be 3.20. So in order for us to find the amount for repurchase, then this is the average price that we are going to use. And then I always tell my learners that they need to do a mini triangle, and then on this side it will be for OSC, ordinary share capital. We are going to use our 3.20, and then it's what? At 3.20, and then we multiply, and then 50,000 multiplied by 3.20, and then how much are we going to get for our repurchase? We are going to get 160,000, and then now we go and record it in our OSC. So when did we have our repurchased? We had repurchased 30 June, so we are going to write 30 June. We had the money going out of the bank, so it's what? CPJ. The money went out of the bank to buy how many units of shares? 50 units of shares. At what price? At the average price of 3.20, and then amount is how much? 160,000. And then in this case, guys, you are safe. So when in your own, you will show brackets and show those calculations. So because of I don't have enough space there, guys, these are my calculations. So 50 multiplied by 3.20 equals to this. 300,000 multiplied by 4.20 equals to that. And then this is what? Your average price. And then, guys, and since we have this mini triangle of ours, at the top there you are going to write CF. CF stands for what? For cash flow. And then while RT will stand for what? For retained income. Retained income. So now, guys, we have negotiated to buy shares at our average price, and then above the average price it's 1 rand point 40, meaning it's 1 rand point 40. The money that is going to be used for retained income, it will be 1 rand point 40, and then your 1 rand point 40 plus 3 rand point 20 equals to your market price, in which it's how much? In which it's 4.60, and then this amount will go to our cash flow. This amount will go to what? To cash flow, and then this one is ordinary share capital, while this one is for retained income. And then we can immediately take this amount and take it to the retained income, meaning when we buying shares, we tried to retain this amount of money. So we are going to go in our retained income and then write that on the 30th of June we had a bank, and then it was for CPJ, and then how much did we retain? 50,000 units of shares multiplied by 1.40 cent. And then we managed to retain how much? We managed to retain 70,000, and then we are going to show them that we managed to retain how much? 70,000. And then, guys, that's it. So whenever you come across this transaction, you need to record twice. So first you will record under your ordinary share capital using your average price, and then go and record your retained income, and then using the difference. So most of the time in this transaction they will give you the market price. We have what you call the market price. They will say, instead, the company bought back 50,000 shares each at 4.60 rand, but not above the average price, but at the market price of 4.60 rand. And then that 4.60 rand is our market price, is this one. So 4.60 minus our average price is the amount of money that we are able to retain, and then it will go to retained income. So you must expect that they might give you the market price, but in this case they did not give us the market price, but they gave us a different transaction. They give us a different transaction above the market price. So let's just stick with the above the market price. I will try to do more activities whereby we speak about the market price. Sure. And then we are done with this transaction. So now let's go to the second transaction. So guys, on the 30 June 2022, it says the net profit for the year after taxation amounted to 945,000. So now guys, they gave us our net profit after tax as how much? 949,000. Meaning, if we have the net profit after tax, then we also need to have our income tax, which is question mark. And then we also need to have our net profit before tax, in which is question mark. So guys, in this case, all the time, the net profit before tax will always be 100%. And then now let's continue. Income tax is charged at 30%. So our income tax for now, it's 30%. So our net profit before tax, before subtracting our income tax, it will always be 100%. And then when we subtract our income tax, as it's given as 30%, it can change. It can be 20%, it can be 70%, it can be whatever percentage. But for now, we are given 30%. So our 100% subtract our 30%, we are going to get what you call net profit after tax, meaning it's how much? This is equals to 70%. This is 70%. So now we are looking for what? For income tax and also net profit before tax. But we are going to use a strategy of what you are saying, that what you have multiplied by what you don't have divided by what you have. So right now, which amount do we have here? So we have our 945,000. And then what are we looking for? We are looking for income tax of 30% because of we don't have it. So we are going to multiply by 30% over what percentage we have. So this amount is out of what percentage? It's out of what? It's out of 70. And then how much is our income tax? Then our income tax will be 405,000. So now we managed to get our what? Our income tax as 405,000. What we have is this amount, which is this. multiply by what we are looking for. We are looking for what? For an income tax. We are looking for income tax. We are looking for 30%. So this is 30%. Out of what we have, what percentage do we have? We have 70% because 945,000 is equals to 70%. So we divide by 70, then this is our what? Our income tax. This is our income tax. And then we can also calculate our net profit before tax. So how are we going to calculate our net profit before tax? What we have, we still have our 94500. Multiply by what percentage are we looking for? Right now we are looking for 100%. So we multiply by 100 divided by what percentage do we have? It's 70%. So divided by 70. And then how much is our net profit before tax? So we are going to say 945,000 multiplied by 100% divided by 70, and then it's equals to 1,350,000, and then it's our what? Net profit before tax. This strategy, guys, and you can use it either to find each and everything that you are looking for. So this thing is called what you have multiplied by what you are looking for divided by what you have, and then you will be able to calculate whatever you are looking for. So let's try maybe to use the 30% in order to get our net profit before tax. So let's say in this case we are given 405, so we are given an income tax. So 405, it's our income tax. This is what we have multiplied by what we are looking for. We are looking for the net profit before tax, which is what? 100%. Divided by what percentage do we have? This 405, it's equals to what percentage? 30%. Divided by 30%, and then equals to how much? And then we calculate 405,000 multiplied by 100 divided by 30, and then we are still getting our 1,350,000. So what you have multiplied by what you don't have, then you will get what you are looking for. So in this case, guys, we were able to calculate our income tax as this as 405,000, as well as our net profit as what? As 1,350,000. 350,000. Sure. So now let's record our information. Let's first start with our SARS. So always under SARS, under the credit side, we will have what you call income tax. It's from the general journal. So how much is our income tax? 405,000, and then we are going to record our income tax 405,000. 405,000, and then on which day of the financial year? On which day of the financial year? 30 June 2022. So it's 30 June 2022. We have our what? Income tax. And then, guys, in SARS has credited our income tax, meaning one account is credited, meaning another account must be debited. The income tax account needs to be what? Debited. So it's debit as well as credit, and then we are going to write SARS income tax is 405,123, and then we are done. So guys, in this case, since we are able to make it up to here, then now the net profit before tax. So the net profit before tax is known the net profit before tax is always known as our profit and loss. So in this case now, I will also like, if we open an appropriate account, can I just try to open our appropriation account here? Our appropriation account will help us in order to calculate our retained income. So we are going to have what? Appropriation account, and then under appropriation account we are going to have profit or loss. So our profit or loss will be the 100%, so the net profit before tax, which stays at 1,350,000 sharp. So guys, we are done with this transaction. And then the last one, a final dividend of 9 cents, not 90 cents, but of how many cents? 9 cents. So the final dividend of 9 cents per share was declared. The repurchase does not qualify for final dividends. So guys, now we also have to pay for final dividends, meaning now we have to pay for our final dividends. And then this is our final dividends. We also have to pay them. But when are we paying them? We are paying them on the 30 June 2022. So let's see which shares to qualify for our dividends, for our final dividends. So 1st of June comes first. 1st of June will come first, meaning it qualifies. The 1,500,000 qualifies for shareholders for final dividends. And then October came first before June 2022, meaning it qualifies. And then repurchase they came when June. Repurchase they came 13 June 2022, meaning they don't qualify. Then we have to subtract them. So at the end of the day, how many shares do we have at the end of the day? So it's 1,500,000 units of 1,500,000 units of shares plus the 300, subtract the 50,000 units of shares, and then we are going to be left with how many shares? 1,750,000 units of shares. And then that will be our closing. And then that will be our closing. And then we are going to say now, adding our amount, which is 4,500,000 plus 1,260,123 1,260,000, subtract our 160,000, and then we have 5,600,000. And then guys, whenever you take your amount, whenever you take your closing amount and divide it by the units of shares, you are going to get 3.20 cents, meaning that 3.20 cents is equals to your average price. Then you know that you have killed the OSC. But now we are not them. We have to pay for final dividends. So now, because of they are all these shares, they came before. So now guys, since all these shares they came before our final dividends, then we'll have to use this units of shares, whereby now we are going to say 1,750,000 multiplied by 0.09 cents. And then how much is our final dividends? it's 157,500. So this will be our what? Our final dividend. And then now we have to record it under our ordinary share capital. So it's the calculation would be 1,750,000 multiplied by 0.09, and then it will be what? CPJ we have paid. How much did we pay? 157,500. So guys, that is how we managed to complete our transaction. So what is left right now is to close off everything that we have. So now let's close off our ordinary share capital. First we have to look at the bigger side. So the bigger side is our what? The bigger side, so the bigger side will be our credit side. 4,500,000 plus 1,260,000. So it's 4,500,000 plus 1,260,000. It gives us 5,760,000. And then we do the same thing under our debit side. We are closing off 5,760,000, and then at the end our debit side must be equals to this amount. And then now we will have to what? To balance it. Cindy. And then guys, we have to balance our debit side. Then we are going to have a balance carried down, whereby we are going to say 5,760,000 subtract our 160,000. 5,760,000 subtract 160,000, and then it's going to give us 5,600,000. And then now it's going to be what? Balance carried down. So it's balance brought down. How much is it? 5,600,000. This is our what? Our closing amount. And this closing amount of us is the same as our straight line method. This is our straight line. So 5,600,000 is our closing, and also our ledger account says the same thing. And then guys, we can move forward. And then now let's close our SARS. So same thing under SARS, we are going to look for the what? For the bigger side. We are going to look for the bigger side. So which one is the bigger side? It's clearly the credit side. So the credit side is bigger with our 405,000, and then we are going to do the same thing in our debit side, and then it's 405,000. And then now we need to balance our debit side, so that at the end, whenever we add these amounts, they're equals to this amount. So now we have to write our what? Our balance carried down. And then we are going to say 405,000 405,000, subtract all this amount, subtract 162,000, subtract 198,000, subtract 8,000, and then the difference that we have is 37,000. And then now we are going to take it down as what? Balance brought down, meaning it's our closing balance. So in this case, we are closing under the credit side, meaning it's what is the amount payable to SARS. Since we are done with our SARS, so now let's close off our income tax. So you are still going to do the same thing. We are also going to look for the bigger side for our income tax. So clearly the bigger side is our debit side, and then it's bigger with how much? 405,000. And then we do the same thing under our credit side, 005,000. And then in this case, guys, in this account, we don't close it off by saying balance carried down, balance brought down, but we have to write what we need to have, what you call appropriation. So we have to have what? Appropriation, and then we write 405,000. And then now, guys, we move to our ordinary share capital. So now what we are doing, we are closing off all the accounts. So now we go to ordinary share dividends, and then under ordinary share dividends, so the bigger side is the debit side. The bigger side is our debit side. So let's just show is the debit side, and then we have the credit side. So the bigger side is the debit side, and then with how much? 210,000 plus 157,500, and then we have 365,000. And then we are also going to what? To write in our credit side 367,500. And then same thing, we are not going to close by using balance brought down or balance carried down. So we are going to write what you call appropriation, and then it's general of how much? 367,500. Guys, and since we managed to close our ordinary share capital, the last thing that we need to do, guys, is to discuss our shareholders for dividends. Shareholders for dividends, it's a liability, guys, and this account, guys, consists of what you call final dividends. So since our ordinary share capital, ordinary share dividends consist of two dividends, such as interims as well as final. So we need to take these final dividends and record them under our shareholders for dividends. And then we are going to take our final dividends as 157,500 and record 157,500. And then it's from our what? Ordinary share dividends. Then it's what? GJ. So basically this amount, most of the time after calculating final dividends, then you have to record them under the shareholders for dividends. So since we managed to record that, then now we can close off our account by what? By looking at the bigger side. By looking at the bigger side. So the bigger side clearly is our credit side with how much? 180 157,000 plus 157,500, and then we have 337,500. As well as your debit side, it's 337,500. And then we have to have what? Balance carried down, meaning now we need to balance this side. So how much are we going to say? 337,500 subtract our 180,000, then we are left with 157,500. And then now it's going to be what? Balance brought down, 157,500. And then we are done with our shareholders for dividends. We are done with our ordinary share for dividends. We are done with our income tax. We are done with our SARS. We are done with our we are not done with our retained income, but we are done with our ordinary share capital. So in order for us to be able to close off our retained income, we are going to need what you call appropriation account. So the structure of the appropriation account will be as follows. So you are going to have your net profit before tax, or your profit or loss. So we have managed to record our profit and loss. And then under the debit side, so we have the debit as well as the credit. So under the debit side, we have to record our income tax as well as the ordinary share ordinary share dividends. So whenever I talk about ordinary share dividends, I'm speaking of this account. And then guys, because of its appropriation account, and then we need to go to all those accounts and look for any account that is having an appropriation in them. So ordinary share account does not have an appropriation. Retained income, for now, we want to complete it. SARS does not have an appropriation, but income tax, it has an appropriation there of how much? 405,000. Then we need to record it. So we have an income tax with an appropriation of how much? 405,000. And then now we continue now. Ordinary share dividends, it has an appropriation account of how much? 367,500. So we need to record it. It's 367,500. And then the last account, which is shareholders for dividends, it doesn't have any appropriation account. So right now guys, we can be able to close off. So now the bigger side, which one is the bigger side in our appropriation account? So the bigger side, it's clearly our credit side with how much? 1,350,000. And then you're going to do the same thing in your debit side, 1,350,000. And then our 1,350,000 will subtract our income tax, will also subtract our ordinary share for dividends. And then the amount or the difference that we are going to have, then it will be what? It will be retained income. It will be what? Retained income. So let's calculate. 1,350,000 subtract 405,000 subtract 367,500, and then the remaining is how much? It's 57,007. The remaining is how much? 577,500. And then since this is the amount of money we retained after having a profit of 1,350,000, we paid tax of 405,000. We also paid our shareholders for dividends. So the amount of money we are left with in the company amounts to 577,500 under the debit side of the appropriation, meaning one account is debited, meaning our retained retained income must be what? Must be credited. And then we are going to write that information comes from what? Appropriation. Appropriation. As how much? 575,500. And then now we can close our retained income. So now we are looking for the what? For the bigger side. So clearly the bigger side is our credit side. So 650,000 plus 577,500 equals to how much? Equals to 1,222,700 1,227,500. And then the same thing under our debit side, 1,227,500. So now we need to balance our debit side, and then now we are going to have a what? A balance carried down. So our 1,227,500 subtract our 70,000, and then we are going to have 1,157,500, and then it's going to be what? Our balance brought down, 1,157,500. So guys, and this is how we complete our company's ledger account. So if ever you did not understand, you have a right to rewind and also repeat as much as you can until you understand. So the first thing that you need to do is to show your opening balances, and then make sure that you read your transactions and also you understand, and make sure that you pay attention to your dates, especially when it comes to calculating the dividends. So guys, and thank you so much for being with me in this lesson. So guys, and I will make sure guys, and I keep on uploading, but this one guys, it's a bang.